What's going on YouTube? Austin Zabak here with another YouTube video where we talk about business, we talk about finance, and we talk about real estate. And in this video, I've got my business partner here, and we're gonna be talking about the real estate market crash of 2020 or 2021. We're gonna break down all of the facts, all of the figures. And by the way, we're in real estate, okay? So you're gonna hear it directly from the source. We're actually standing right now at a rental property that we just bought. So we're gonna share with you kind of our thoughts, our feelings, our opinions on what the market is about to do. So if you own a house, you're about to buy a house, you've thought about getting into real estate investing, or you just want to buy a house to live in, this is a video you're going to want to stay to the very end so you can make sure that you understand what is about to happen. So obviously there's a lot going on right now, Brenden. We've kind of went through this whole pandemic, right?
Yeah.
And everybody watching right now has seen a lot of, this stuff kind of going on, right? Yep. And, we saw, the CARES Act, right? There was that initial CARES Act where the government stepped in. It was like a $3 trillion bailout, right?
Yep.
Where they said, okay, basically, you couldn't evict certain people, you couldn't foreclose on certain people.
Right.
So in September, they extended the federal moratorium kind of eviction / foreclosure, where basically, it was due to kind of come up in September,
Yep.
But now it has actually gone through the end of the year. So right now, Brenden, we're seeing kind of this weird thing going on
Yep.
where supply is low,
Yes.
right? So I mean, in Arizona, I think supply right now, we're at like a 1 month supply. Meaning, right, if everything stopped coming on the market, right, if no new listings came on the market, in 1 month, everything would be sold.
Gone.
Which is kind of crazy, right?
Yeah, it's nuts.
So based on your experience, what is like a healthy market? Like where it's kind of like a neutral market. I mean, how many months supply are we talking about
in
here?
Phoenix, Arizona, we're a healthy market. We're looking at about 27,000 units on the market between multifamily, single family, lots, condominiums.
And we're at like 8,000.
And that is between all of those asset classes, which is really mind-blowing.
Yep.
You look, there might be 3,000 to 5,000 single family residences
8,000
available.
literally, townhouses, patio homes, everything, right?
Yep, that's everything.
And that's in Arizona, Maricopa County, but
Yep.
we're seeing that across the entire country.
Yeah.
Right, we're seeing low inventory.
Yep.
And what does low inventory cost?
Low inventory causes high demand because there's much more people who are looking to purchase the properties and much less of it available. So,
Which
market
causes
and
prices to go up, right?
Yeah.
So prices have gone through the roof,
Yeah.
right? Essentially all over the country, right?
Yep.
And now it's actually become a thing. I was reading an article where they were saying like now the psychology of it
Yep.
is kind of also now circulating.
Yeah.
Because now the psychology is that the supply is low and the demand's high,
Yep.
which is causing the demand to go even higher.
More high.
Which
'Cause
causes
people are
the
panic
prices
buying.
to go even higher.
Yep.
There's like multiple things that play here.
Pumping the market.
Pumping the market.
You know what I
Just
mean?
pumping the market, right? And then again, to add on to that, right, you can't evict anybody right now.
Right.
You can't foreclose on anybody right now.
Right.
So the foreclosure rate has literally dropped to basically nothing.
Yep.
And now you've got all these people on YouTube and everywhere talking about, okay, in 2021, right, we're going to see this massive influx, right, of evictions, of foreclosures, which in theory will cause supply to go up. First of all, do you think there's going to be a large amount of foreclosures and evictions in 2021, like January, right? A lot of people are talking about that. And then if that does happen, is that going to cause supply to go up to the point where demand is actually going to go down? And prices are going to go down also, or what do you really think? I mean, obviously there's no right answer.
I think within our market, and it's a similar situation across the country, what we're seeing here in Phoenix, Arizona, if we see a bunch of foreclosure inventory hit our market, actually I think it'll be really, really good for us. If anything, I don't see prices essentially going down or anything like that, but you might see a little bit of a plateau. But I see that inventory getting gobbled up very, very quickly. I think a lot of people like myself and you would actually be very excited to get our hands on more inventory. And again, 27,000 units. I don't see that unit number just all going onto the market at once from all these foreclosures. So it's going to be rolled out over time just naturally because the system can't handle all of that foreclosure process at once. There will be a slow kind of rollout of those, I would imagine.
Yeah.
So if the market goes up, I don't think that the inventory, if anything, again, it might just cause, who knows, it could continue to keep going up. I think it could be really, really good for the market, good for a lot of investors, good for home buyers. And again, there's just so much pent up demand that it might just get snatched right up. And we might just still have the same problem, to be honest.
And we also, so let's add a couple more variables now to the equation, right? Interest rates are at an all-time low.
Yep.
Jerome Powell and the Fed, and they basically come in and they've said, look, interest rates are going to stay low for several more years.
Yep.
Right? The government has stepped in and they basically said, hey, we're going to keep interest rates low at all costs.
Right.
They basically said they will stimulate the economy
Right.
so that interest rates stay low. In turn, causes demand to stay high
Right.
because, first-time home buyers, investors, they're looking at it from the standpoint of, well, I can get into a house at
Right.
a below 3% interest rate potentially,
Yep.
and who cares if the market falls by a little bit,
Right.
Because if the price is correct by,
Right.
let's do even 10%, right? But my interest rate's 2.5%.
Your overall payout on the value of the home versus
Exactly.
what you're actually going to pay is not going to really change.
Because what are most people looking at, right? A lot of people are focused on their monthly payment. That's the only thing they're looking
sure.
at for the most part. I mean,
Right.
most Americans say when they're looking at what they can afford,
Yep.
they're looking at their monthly payment, right?
Yep.
They're not necessarily looking at the price of the home.
as worried about that?
They're not as worried about that,
No.
right? Because in theory, if you don't sell in a down market,
Right.
you're not going to lose money, right?
Correct.
You've got, that was kind of the problem. When you look back at 2008,
Right.
that was the problem, right? But,
Right.
but back then, a lot of the rules, the laws, and the regulations were different.
Yep.
And the banks called the notes,
Yep.
right? And that caused the problem because you had all these investors that were over leveraged. The banks came in and they said, hey, pay up.
Called them all back.
They called them
Yep.
all back. But, a lot of that has changed since then. I mean,
Yep.
there was a lot of things in the system that were screwed up
Right.
back then.
Taken advantage of.
Taken advantage of in a big way, right?
100%.
And we've seen over the last decade a lot of that get corrected.
Strings have been tightened.
Right now, in all honesty, although interest rates are low and prices are doing what they're doing, it's actually rather difficult to get approved for a loan right now.
Yeah, it is.
I mean, not anybody and everybody can
Nope.
just go get a loan.
Yep, you gotta have good credit.
Yep.
You gotta have good income. It's crazy. It's
is.
not like it was before.
No,
You know
I
what
mean, and again, we weren't in the real estate industry, so I don't want to claim that we were, but we know a lot of people who were, right?
Correct.
And when we look at it, and when you look back in time, there's people that, I mean, they should have never gotten a loan.
Right.
That were getting loans in
Yep.
2008, right? Or 2006 or 2005.
Right.
Right. These are people that were, making $40,000 a year,
Yep.
getting approved for $500,000, $600,000, $700,000 houses,
Yeah.
right? And they were just approving them like hotcakes. I mean, it was actually, they call it the subprime mortgage crisis. And I was looking at a statistic where the average amount of subprime mortgages in the overall market is anywhere from 6 to 8%, I believe. And from 2004 to 2006, the subprime mortgages of the overall market skyrocketed to above 20%. So over 20% of all of the loans out there were subprime.
Yeah.
Meaning that they were not good loans.
Right.
But they were bundling the subprime loans up, with a bunch of other loans, and they were
crazy.
selling them off to the investors.
Yeah.
Out of 10 loans, you had, two or three of the 10 were they should have never gotten qualified.
Right.
But they were bundling them up and they were
Yep.
selling them off by the thousands.
Right.
So, the Fannie Mae's and the Freddie Macs and everything. So anyways, it was a big thing, right? So here we are, I think maybe where we take this video kind of just for a minute, I think it's really going to depend, in my opinion, on where you are in the country. You look at where we're at here, right? We're in Maricopa County. This is the fastest growing county in the country, right? But you look at places like LA.
Yep.
You look at places like New York, right? You look at places like, and I don't know, there's some other places probably, but there's places in the country where people are leaving.
Right.
The demand isn't as high.
Correct.
And I think if you live in a place like that, that is, in my opinion, where you might want to be a little bit concerned. As opposed to seeing what we did in 2008, where the whole
Yep.
country crashed.
Yep.
I think if we were to see something bad happen, it's going to be in certain areas.
Yep. Niche little markets.
Right.
California.
Yep.
You say New York.
Well, yeah, prices are. I mean, look at LA.
Yeah.
I mean, come on.
Yeah,
I mean,
it's
they're
unreal.
they're above $1,000 a foot. In some places, I think in Beverly Hills, they're at much more than that.
That's
I mean,
insane.
we're talking big numbers.
About 4 times the price difference of what you'll pay.
And they're
at
not.
top
It's
dollar
not
here.
affordable, right?
Yeah.
Nobody can. Very few people can afford to pay that, right? So I think in those areas they might get hit.
Flock in here.
They're gonna flock,
To
right?
places like this. So we might.
Which could cause us to be sheltered.
Right. 100%.
Right, the places that people are going to move to,
Yep.
when the place that they're used to living becomes unaffordable,
Yep.
is going to now potentially
Yep.
shelter the markets where they're moving.
Right.
Because the demand is going to stay high.
100%.
Now, in the places that they're leaving, it's going to be a little bit of a
Right.
50-50.
And where they're incentivized in these markets, again, are going to be the things like the interest rates.
Right.
And the Fed looks at what does America produce? And where are we producing money, value, et cetera? America needs the mortgages to turn the money so that they can make the money on their interest rates. It's so vitally important, and that's why I believe they've made it so clear that they're going to continue to essentially ride this train out, supplying the money to the market. You look at all the tax that the government receives from first-time homebuyers. These people are paying taxes. They're not writing it off. They do have a lot of investors, buying real estate, but it's the biggest industry in America. They clearly want to keep it going. It's at least one of them.
Right.
You know what I mean?
For
We
sure.
don't produce much else.
And
You
I
know what
couldn't agree
mean?
more. And I couldn't agree more. So the last thing that I kind of want to talk about really quick then is are we going to see, and I think we might, right? And you look at a lot of the bigger guys like Grant Cardone and stuff, talk about how America's becoming a renter nation.
Yes.
Right? Now, again, there's always going to be a market share for the first-time home buyer and for the homeowner, right? Of course, there always will be. But a lot of the people, I think, potentially, that are about to, default on their mortgage, right? Are what are they going to become? They're going to become renters.
They still need somewhere to live.
You got to have somewhere to live, right?
They're not just going to go homeless.
If one thing is true, it's what you just said.
Right.
People have to live.
Right.
The homeless. I mean, don't get me wrong. In certain areas, is bad, but it's not going to. I mean, everybody's not going to be homeless.
There needs to be a product to cater to these people who need homes.
That, in my opinion, could make it very lucrative for real estate investors right now to potentially, in a good up-and-coming area, take advantage of the low interest rates, like we're doing right here at our property right now. Get a good deal on a property, right? But buy it a little bit below market value. Everybody says you make money in the buy.
Correct.
Right? And then ultimately
put in the value.
Rent that out. Like we were talking on the way here before we came here, you were saying, look, if you can get a good product.
Yes.
Right? A product where, it's
in a good
it appeals
neighborhood
to a big market of people, right? A 3-bedroom, 2-bathroom, under $2,000 a month, right? Brick build. In a good neighborhood, in an up-and-coming area, you could potentially secure a lot of long-term wealth.
Correct.
In my opinion.
What
are your thoughts on that?
So I think if you're investing into, there's different grades of real estate and different asset classes. If you're getting the highest asset class, you might get a lower cap rate, but I do believe that if you're at least getting a value add deal, paying a little bit top dollar, but then putting in that value, renting it out to a really high quality tenant, you're gonna get that long-term consistency is what we're looking for.
And then the last thing is new builds. What do you have, if you looked at all into that, and you look at the pandemic, right?
Correct.
And I read a couple articles where people are moving out of the cities into the outskirts.
I love it.
Because they're working from home.
I love it, actually.
And I love that too. My question for you is, builders right now, by the statistics, are not building quick enough.
Nope.
New builds are not, we're at like half of what we need to have. I mean, you look at the last decade even, right? They're not building them quick enough.
Right.
So is there enough supply in the new build market in the outskirts of these major cities? And what does that look and feel like?
For the investors, it's a great opportunity because these renters, again, they want to live just like they want to buy new. They want to live in these places. When you can just purchase these properties as an investment, you're now getting an extremely very high quality renter pool. It's extremely huge opportunity for people like us to purchase them. Are they building them quick enough though? No, we're about 67,000 units behind what we need here.
Right. And will that cause any harm to the market, or is that just something that's always been the case and it always will be the case?
Well, that's the beautiful thing about real estate is at the end of the day, they're not making any more land.
Right.
A lot of places like Tempe, Arizona, they're only growing vertically. So that's why when we purchase this house, single family, we know they're not making very many more of these neighborhoods. So therefore, the supply for this product is very, very low. So that means us as the investors, we can demand a very high rental price. And we can be very, very strict on the criteria you must meet to have the opportunity to give us your money. You know what I mean?
Exactly. 100%.
So
I couldn't agree more.
that's kind of my thoughts on
it. I love it. And I think that really summarizes, I think we hit every major topic, right? And it leaves the viewer, right? You watching right now, to ponder, to do your research, to look and to really understand, the market and understand your situation. Look, in every market, right, there are people, unfortunately or fortunately, depending on how you look at it, right, there's people that win and there's people that lose. And that's the reality of the world we live in right now. And it'll be the truth moving forward. It's been the truth for the last century. And unfortunately, we're going to go into a market where people are going to probably lose their house. But again, like Brenden said earlier, they have to live somewhere, right? This is going to be a big learning lesson for a lot of people. And a lot of people are going to come out the next time the market, kind of shit, because the market's always up and down, right?
Correct.
And next time they'll be smarter and better off. And for a lot of people, they'll make money in the next up and coming market as well. So I think ultimately it's going to be what it's going to be regardless, right? And there's not a whole lot anybody can really do about it at this point.
And for us, it's cool because, we get to ultimately go out there, even if people are in these distressed situations, we provide a little bit of a relief and a way out of their problems, but at the end of the day,
and help them
huge.
Get on their journey again
right.
to rebuilding.
Right.
Right. You know, we literally, you're in a cash for houses. We own an investment company. It's how we bought this property right here.
Yeah.
And like you said, you know, we're providing cash, and not only that, we're providing
peace of mind.
Peace of mind.
You know what I mean?
And we're agents, right? We're actually helping them relocate and get back on their feet and get rocking and rolling again.
100%.
Go get a new job. Right.
Get your funds that you need back in your pocket.
Yep.
And a lot of people have their money stuck in these houses.
And learn, invest, and get their finances in order.
Yep.
Right. And that at the end of the day is the circle of life. And I think if people like us and more people like us can go out into the marketplace and help people
Provide that
value,
Yeah.
then ultimately you'll be better off as a result of that. I really appreciate you doing that video with
Dude,
me,
of
Brenden.
course.
And we'll do a lot more videos just like this. So if you like the video, definitely drop into the comment section down below, letting us know, what you think, okay, about the upcoming market and what you think ultimately is going to happen. Again, if you haven't already, I really appreciate it if you take a quick moment and just smash that like button for the YouTube algorithm. And I'll link Brendan's information down below. If you ever want to come to Arizona, live in Arizona, we got your back, we got you taken care of, and I look forward to seeing you guys in the next video.